Yeah, hi everyone. Thank you for joining our webinar, monthly mortgage webinar, where I invite my preferred mortgage broker, Jordan Thompson, also known as the Mortgage Queen, to talk about what's going on in the mortgage landscape industry right now. So like the past months, we've been talking about interest rates rising and how's that affecting the market? How's it affecting qualifications? Today, we are going to be talking about some new government home buyer incentives, which I'm really excited to learn about, as I've been receiving a lot of requests from my clients asking about it. They say they've been reading some articles that talk about it. So without further ado, I'd like to introduce Jordan Thompson to the stage to share more about this exciting incentive.
It's harder to purchase a home these days, certainly for first-time home buyers. They are being squeezed and have been squeezed out of the market. Prices are out of touch. And so back in September 2019, the federal government, in its efforts to help first-time home buyers, came out with what's called the first-time home buyer incentive. And it didn't get a lot of pickup. A lot of people didn't use it, particularly here in Vancouver, Toronto, Montreal, and there were a couple of reasons for that. Some tweaks have been made to the program that I think are certainly more helpful. So what is the first-time home buyer incentive? Well, as it suggests, it's for first-time home buyers who are particularly buying an owner-occupied home. So that's really important. It's got to be your principal residence. This is not for people buying investment properties or rental properties. So it also must be an insured mortgage. So an insured mortgage is one that has a down payment of less than 20%. So as you probably know, a lot of homes, here in Vancouver, we have to have at least 20% down. So that is for homes that are over $1 million. And a lot of homes are over $1 million. So they do not qualify for this program. But it's typically not the first-time home buyers and the younger buyers that are purchasing in that price range anyway. So the first-time home buyer incentive is where the federal government will match your down payment of 5% to 10% down. So they'll only give you a maximum of 10% down. And it is a shared equity mortgage. So if you, the buyer, are putting 5% down and the federal government also gives you 5 to 10% down, that has essentially increased your down payment. With that increased down payment, what that does is lower your monthly payments. And that's how they're trying to help out, by lowering your monthly payments, keeping more cash in your pocket, and thereby hoping to make it more affordable for younger home buyers or first-time home buyers.
So Jordan, you're saying that
yeah,
it's for primary residence. People are buying for their primary residence. Second, you said it's for under $1 million.
Yes.
And third, you said that they match the equity up to 10%, meaning
right.
So if they put 10% down, government's not going to give you 10%.
The 10% comes on the newly constructed homes. Resale homes is 5%.
I see.
There's a handy dandy calculator that is fun to kind of play around with, so you know exactly how much they're willing to offer or how much incentive they can give to you. So it is right, Gary, it is really important to remember that this is not for rental homes, and you can't have a down payment of 19.9999%. They're only going to match a maximum of 10% down.
So if you put 10% down, they'll give you 10% for new homes.
I would play with the calculator. They seem to have this kind of
like sliding scale kind of thing.
Yeah, there's a calculator, and that's what I always use, because it definitely changes. So as I said, it's a shared equity mortgage. What does this mean? And this is where it becomes important. It it is in second place behind your first mortgage. So you're going to get a mortgage. They're going to give you money, but it is a mortgage. When you sell the home or refinance, or when you have to pay it back, you will have to give them the incentive amount back. So whatever they gave you, plus the appreciation of the mortgage, or sorry, of the property value as well.
Wow.
So, right. So if they've given you 5% for your down payment, you are going to have to share in 5% of the appreciation of your home. If they've given you 10%, then it used to be that they could take up to 10% of the appreciation of your home. And they've made some tweaks that I think have better serve new home buyers for sure. One of them is the fact that they have now limited their the amount that of appreciation or depreciation that you have to pay back to 8%. So I think that's good, right? So if your home appreciates more than 8%, you only have to pay back up to 8% of the appreciation. In the same way, if your home depreciates, they will only take a hit of 8% of the depreciation.
Is there, how do they calculate appreciation and depreciation? Is it based on the sold price?
Right.
Okay.
Yeah, exactly. So that's actually back in the pros and cons. But a couple of other things about what is it. So because it's that shared equity, you've got two mortgages on the home. So that's something to be aware of. And in that case, when you are going to register your mortgage with the lawyer come closing, there might be some extra costs because your lawyer is now registering two mortgages. There are two mortgages registered on the title. So if you're to pull title, you'll see your mortgage with bank ABC plus the federal government shared equity mortgage of whatever it was that they gave to you. So that is actually, it can be considered a little bit of a con. And like I said, there wasn't a huge uptick on this program, which is why the government is trying to make some tweaks. When it first came out in September of 2019, I personally couldn't use it with a lot of my clients in Vancouver. And the reason for that was the household income, those that were going on the mortgage, the maximum household income was $120,000. So there are certainly home buyers in Vancouver that have a higher household income than $120,000. So it wasn't open to them. Also, I could often qualify my clients for more money without using this program. So we often didn't use it. However, one of the changes that they've made is they've now increased the annual income to $150,000. So your household or the borrowers who are going to be getting the mortgage can qualify up to a mortgage with $150,000 of income. So I think that that's a real benefit. And I think it's going to serve more newer home buyers because it opens up to so many more.
So they made the change this year, or?
Yeah, fairly recently.
Have you seen an
about the year.
Have you seen an uptick after they made that change?
Well, here's the funny thing. People didn't even know about it. You know, like the government had expected, you know, way more home buyers. And then nobody used it. And like I said, it was because, you know, the household income was too high, or we could get more without it. So we're kind of bringing it back to the table. And I do know more people using it for sure. Particularly too, and I'm sure you can echo this sentiment, Gary. more condos are selling now. They didn't really, they didn't get hit as much with this downturn that we're starting to see. And that's exactly the type of property that the first-time home buyers are getting into. So I think that yes, it's absolutely a great option to look at anyway. With higher interest rates, if we can lower your mortgage amount and keep more money in your pocket by lowering your monthly payment, I think that that's a great thing for home buyers.
Is it easy to qualify for that? Like, is it easier to qualify for a mortgage if they use the program? Just
No, no. But what you want to do is let your mortgage broker or mortgage specialist know you're going to be using this program. As soon as you have an offer on a home, there are a couple of forms that you need to fill out. We need to let your lender know that you will be using this program because it forms part of your down payment. So you need to have at least a couple of weeks before funding to make sure this is in place. So do not do this and try to have a 3-week closing.
I see.
Because the government does take some time, right?
Yeah.
So you certainly want to have all your ducks in a row. And your mortgage broker or myself, please give me a call. We will be walking you through everything and helping you along the way. Oh, Anne's asked a question. Do you want me to answer that now?
Yeah, go ahead, Jordan. So the question is, so when a first-time home buyer decides to live in the property for the duration of the mortgage period, say 25 years, is the government loan tied to the same duration, or is there a period the buyer has to pay back the government earlier?
That's a great question. Yes, so you have to pay back the mortgage, the incentive, plus the appreciation after 25 years, or if you sell the home, because it is tied to the home. There also may be some issues if you choose to refinance your mortgage as well. You'll want to check with your lender on that.
So you have 25 years to pay for that loan.
Right. I'm just going to, like I said, there's quite a lot of information on it, and the website is great. So the incentive must be paid in full. So you may not make any partial payment after 25 years or when the home is sold. There are a few ways where changes to the incentive can trigger a repayment. Let's say you go through a breakup and you want to buy out the co-borrower. If this requires additional insured funds, you must pay back the incentive in full. If you are porting your mortgage, that's another thing. Porting is when you take your mortgage from one home to another home, to a new property. That will trigger a repayment as well. And a partial release of security is considered a sale and will trigger repayment of the incentive. So that might be, for example, if your parents are co-signing on the home and we remove your parents from title after a few years when you qualify on your own without the help of parents. So that would be the release of a security. So that can trigger a repayment as well. And then, like I said, if you're refinancing, so refinancing is when you want to modify or alter your mortgage in any way, you'll certainly want to discuss that with your lender to see if that's going to trigger that repayment.
So have you seen a lot more clients of yours like taking on this incentive and using it?
I've certainly had more questions about it. Here in Vancouver, like I said, especially during the pandemic, we didn't see a lot of insured mortgages. Definitely seeing more of those now, though. And so I am seeing, people bringing it up or asking more about it. And like I said, it kind of went by the wayside initially because it didn't fit Vancouver clients. Just to let you know, it is available all across Canada.
I see, I
So,
see,
right. So it certainly serves many markets.
I see.
But here in Vancouver, when we have such high housing prices, it didn't fit everybody's
Yeah.
scenario. But I think now, given the changes that have been made, particularly that income qualification of 150,000, that's a definitely helpful for sure. Yeah, I think it's certainly worth a look.
Mhm.
Discuss with me or your mortgage professional, see if it's a fit for you. Play
Yeah.
with the numbers. It's always important to discuss what your goals are with your mortgage professional.
Yeah.
And also, Gary, discussing with you as well.
Yeah.
Like I said, the government's going to get a little bit of a piece of
The
the pie, right?
Yeah.
So a lot of people are like,
Are you
maybe I'll
allowed to
just come
pay
up with
them
that.
off, pay them off sooner?
Yes,
So
yes,
that's a great option. So then, like before your property appreciates like crazy, let's say you made enough money to pay them back, then, then you could potentially buy out your partner, right?
Mm. Yeah, I think that could be the case for sure. Yeah, and interesting the timing of when they changed this new and this. I mean, it literally just came out now, which is why when I was doing some research on the incentive, this 8% here,
Hmm.
that they'll take a maximum 8% of the appreciation and a maximum 8% of the depreciation. So what does that signal that they think is happening? That some properties might be going down in value. But like I said, the condo market still seems to be holding steady.
Mhm.
And so I think for first-time home buyers, that's probably the market they're going to be in anyway.
So then
So-
if you, let's say you're buying a property and you put 5% down and you put and then you get another 5% from the government.
Right.
So if your property goes down in value, then but you still have to pay the 5%. But what
Right.
about you don't have to pay the appreciation. So
Right. So in the case of a depreciation, you repay the incentive amount minus a maximum loss to the government of 8% on the incentive amount from the date of advance to the time of repayment.
So how you could potentially take advantage of this is, let's say you buy a $500,000 property and you put 50,000, 5% is 10%, 50,000. You put $25,000 down.
Right.
You get $25,000 from the government, which combines to your 50,000. And then let's say the market crashes to like 450. So then you pay off the loan then. So you pay off the 25,000 and what happens? There's that incentive of 25,000, you only pay a smaller they pay you back some money.
In the case of a depreciation, the incentive amount minus a maximum loss to the government
Of 8%. So if the
right. So
if they
if they gave you $25,000,
yes, and
they will only take an 8%
hit.
Loss.
So let's say your property
right?
went down 10%. So they will take an 8% loss. So, which is $40,000. But so then technically 25,000 minus an 8% loss of $40,000 equals negative. So then you wouldn't pay them.
You have to pay them back the 25,000
minus the loss. But if the loss is greater than what they put down,
right?
That's funny.
Yeah, they will. And when it first came out, actually, it was that's what kind of people laughed at, right? It's like if your home does go down, well, they will, they will take the loss, but now they're saying only to 8%, right? So
But if that
um,
8% is greater than
we'll
their
have to see
incentive.
how that one plays out.
Yeah, that's
Because
an
like I said,
interesting one.
I'd like to see the government can be so confusing sometimes. We haven't seen that. Literally, this just changed with the last federal budget, which was like literally a month or two ago. So we'll see how this plays out and how it actually works. When it first came out in September 2019, we mortgage brokers had so many questions for the government. Some loans, for example, already have two registered mortgages. How does that affect it? They're like, I don't know. they didn't really know. They're not bankers. They logistically they didn't understand. So they had to make some changes. So we'll see how this, at least this new tweak of this 8%, we'll have to see how it plays out.
Yeah, and is saying that so whatever causes a trigger for repayment of incentive, I believe an independent property appraisal will have to be appointed. I don't know.
Right. Yes, or a sale, right? Because they'll know how much they'll know what the appreciation was because they'll see the sale price.
But yeah, like I said, if
But
you
yes,
bought $500,000 property, went down to 450, 10%, and they put down 25,000. So technically it went down 50,000. So they will only be subject to an 8% loss, was 8% loss on the total purchase price. I'm guessing total purchase price of 500,000, 8% is 40,000. So they put down 25,000, but they have a loss of 40,000. They pay you money.
No, they're not gonna. Yeah, right.
I don't know.
But there actually is something that they've just, like I said, they've also just put out. But yes, Anne, you are right. In some cases, an appraisal will be done to determine what the fair market value of the home is. Or I've lost what I was actually looking up here. Oh, it's if you've already paid back the incentive. Let me just see what this was. And this 8% thing is retroactive. It looks like you can actually claim. You can go back to them and say, "Hey, I paid this incentive, or I've paid some back. I paid 10%." But now it's only a maximum of 8%. That's if there was an appreciation of the property. It looks like they may be giving you some money back in that case.
Oh, interesting.
Yes. The best thing to do is it's actually a very, not many government websites are quite intuitive and friendly. This one really is, and there's a ton of information on it. To be able to learn more, you want to make sure that you fall into that. If you're not an obvious first-time home buyer, for example, and then like playing around with that calculator.
So Anne says, if a first-time home buyer buys a principal residence for $900,000, government helps with the $90,000, and it appreciates to $1.5 million, then the profit of $600,000 is to be shared, right? So then the government will only take 8% of 600,000.
Yeah, that's right, Anne.
So they
now if it's $900,000,
900,000,
it would that could only be a new construction because let's see, $900,000. Well, I guess if you had you need 10%.
10% down is 90,000. So let's say,
right? Yeah.
But they will only put down what you put down. They match you, right? So if you put 5%,
I believe it's just it's a matching.
So let's say you put down 45,000 and then they put down 45,000 and your property appreciates to 1.5. So they take 5% of the appreciation.
Right. Yeah. And you've got it right. Yeah. So if it appreciates the 600,000, they would take a maximum of 8%. That's correct. plus the initial down payment. Well, they wouldn't be providing you the 90,000 actually. They only, in your case, in this case of the 900,000, you would have come up with, say, the 45,000 yourself. Now, I want to be careful. 150, the maximum income we can use is 150. So the maximum mortgage you can actually get on an income of 150 is about $675,000. So we actually won't be dealing with homes that are at that $900,000 range. But you've got the right sense of how they do take the appreciation and the maximum amount of the appreciation.
Right. Yeah, like that's really helpful, Jordan. Hey, if you guys have more questions, Jordan's contact information is.
Yes, please call me. Tell your friend.
Give her a contact, call her. It should be, we can put it in the chat or also just message us. We'll be sending you a copy of the replay as well. You can find her if you just Google her name, Jordan Thompson. Her information and website is there, or you can just reach out to me and I can pass on her information to you. Jordan, I know you got to run, so thank you so much for just enlightening us and sharing with us a little bit about this new government incentive for first-time home buyers. Is it just first-time home buyers or just home buyers?
Yeah, first-time home buyers, but
Yes.
I do want to actually, there's a little bit of a, it's not a loophole. It's a lot of, for the government incentives.
Yes.
Like for example, using your RRSP, and next time we should talk about that new home buyer tax-free savings account.
Nice.
I think it's better than taking out of that your RRSP.
Nice.
You also must be a Canadian citizen, a permanent resident, or a non-permanent resident who's authorized to work in Canada. You can have gifted funds, which is great.
So there's a bunch of exceptions, right? Like terms
Right.
and conditions, basically.
Right. So the first-time home buyer, it looks like only one person, if there are two people.
Okay.
Only one needs to be
well,
a first-time home buyer. Take a look at the website, tons of information. We've just kind of scratched the surface there. We'll see how it actually plays out when it comes time to people actually repaying these, because it is fairly new, and I think it's just going to be starting to use it here in the Greater Vancouver area more. So we'll see, but it's good to know that it's out there. Find out if it works for you. Great.
Thanks a lot, Jordan. Hey, her contact information and her link is in the chat. So yeah, like thank you so much, Jordan. And so it's first time home buyer, new construction household income 120,000 and below, and
150,000. They've changed that.
Should be below one. Price should be below 1 million. Yes, price. Yeah.
Yes.
Yeah, and feel free to reach out to Jordan. She can fill you in on like even whether it applies to you directly. So
yes,
that'd be great.
Got to have a house. And the reason, Anne, that it's the price has to be under $1 million, and it's not going to work for homes like I said that are $900,000, because if you have enough income to qualify for that home price, you don't qualify for the first time home buyer incentive. But once you hit $1 million, we must have a 20% down payment, which again, therefore is no longer an insured mortgage. So that and a 30-year amortization as well. So you need a 20% down payment. Anyway, thank you so much.
Thank you, Jordan.
It's been great. Thank you, Hassan. We'll see you guys
soon. Next month. Thank you, everyone.
Okay. Thanks. Bye.
Good day. Bye, guys.